guys, it's your favorite mortgage nerd, Mark Lewis. I am back. Today I'm going to be talking about how credit affects your mortgage application. First of all, you need to know credit is a game. There are winners and there are losers. If you live in American society, you are playing this game whether you want to or not. I'm not here to tell you how it should be. I'm here to tell you how it do be and hopefully give you some tips to help you do better in the world the way it is. Boom! Everyone starts out with low credit. Other people build it up and then some series of unfortunate events occurs outside of their control, knocks it down. Other people just don't pay their bills. Whatever it is, you need to know if you have bad credit, life will just be generally more difficult and expensive for you than someone who has good credit. You're going to pay more for your house. You're going to pay more for your car. Even if you're trying to get an apartment complex, they're going to make you put a deposit down. Same for even utility companies and a whole slew of other things. They're going to make you put deposits down or just give you less favorable terms. If you have good credit, you're going to have access to all the best rates. You're going to get special perks and privileges. And even better, in 2016, there was a study that found that 4 out of 10 people would consider someone's credit score as a factor in determining whether or not they would date them. So for you single people out there, next time someone asks you why you're single, don't say because I'm working on myself. Say because I'm working on my credit. It's just one leg of a larger wealth building strategy to build a wall of financial security around my future family. Can't tell me that's not sexy. I think I'm done here. Anyway, I'm a mortgage advisor, so let's talk about how your credit matters, specifically when you're buying a house. Key point, there are multiple scoring models. There's a whole lot of different credit details that I'm not going to get into. I'm going to just be talking about your FICO score and speaking from the perspective of a mortgage lender specifically, because you don't need a PhD in credit. You just maybe need a little bit of information that you can spend a few minutes watching and possibly be a little better off for the rest of your life. When you apply for a mortgage, there are 2 aspects we look at. There's your credit report and there's your credit score, and there's a difference. The credit report is a compilation of credit-related data, including information on past loans, your current balances, credit cards, your payment history, any collections or judgments. All that's going to be on there. Your credit score is a number between 300 and 850. It's derived from the data on your report using different algorithms that are supposed to determine your credit worthiness and likeliness to default on a loan. Quick note, mortgage approvals are not based on your credit score or the information on your credit report alone. Those are just 2 important factors that are looked at during the application process. Generally speaking, for every 20 points that you get an increase in score, it's going to give you a little bit better options as far as you're going to have slightly better pricing for interest rates and mortgage insurance if that applies. And you're also going to possibly qualify for lower down payment programs or more programs depending on where you're at along the credit spectrum. So let's take a closer look at the so-called spectrum. Obviously, you can expect the lowest rates and the best terms on the upper end. Above 740 to 760, that's pretty much the pinnacle. Once you get to that point, you've hit the summit. You can have a credit score that's beyond that, but it turns out that people with 850s pay their mortgages about the same rate as those with 760. And once you get higher than that, there's no real financial benefit other than you can tell people you have an 800 credit score. And above 650, you'll be eligible for most programs with good rates. Below that, the credit criteria gets a little more stringent, but you're not necessarily out of the running. Some loan programs like FHA tend to be more forgiving of lower credit scores, which is why they're popular with first-time buyers and people who maybe haven't had a long history to establish credit. Also, if you do have an adverse history, that doesn't necessarily knock you out of the running either. It just means you may have to provide what we call compensating factors. And what that is additional information that shows your financial stability and creditworthiness, such as your ability to accumulate savings or evidence that your past history was due to something outside your control, like a medical emergency. Should you wait until you've built up your credit and you have a higher score before you go to buy a house? And that, again, like always, it depends. If you apply for a house right now, then if you've got a 740, you're going to get a better rate than if you've got a 650. But if you have a 650 right now and you wait a year to build your score up to a 740, then you may actually end up with a higher rate. It could be lower, it could be the same, but the market always fluctuates. So it doesn't necessarily mean that having a higher credit score at some other point in time will get you a better rate. In the last year, I've had people close homes with 640 credit and get better interest rates than people who closed a few months later with an 800 plus, just because the market can vary and sometimes it's a little bit higher and sometimes it's a little bit lower. The point is, don't stress yourself out trying to wait for just the right moment to buy. Interest rates are the lowest they've been in decades, and a quarter point difference, so that's 0.25% difference on a $200,000 loan, comes out to about 90 cents a day. So if you rented for an extra 3 or 4 months while you're waiting to try and save a 0.25% on your interest, then you're not going to break even for another 10 years. So you should buy a house when the time has come in your life that you feel you're ready to own a home and work on building your credit in the meantime. Hey guys, thank you so much for watching my video. It really means a lot to me. If you like the content, please like and share it with your friends. It's my goal in 2018 to help over 100 people become homeowners, and I'm not going to be able to do it myself. I'm already working with a team of experts at one of the top mortgage companies in the country. But we're just good at mortgages. We don't know all the people we'd be able to help. That's where you come in. Who do you know who's thinking about buying in the next year? Pass along our information and tell them they can text more info to the number on the screen, and either myself or someone on my team will reach out to get a conversation started. Our goal is to be a valuable resource and provide all the information they need as early as possible so that when the time comes, they can make a decision with clarity and confidence and focus on what really matters, and that's finding the home of their dreams.